Today, Reliance Industries operates at a staggering financial scale. It maintains a market capitalization of over 17.6 lakh crore rupees, supported by annual sales exceeding 10 lakh crore. This chart looks at the price-to-earnings, or PE ratio, across the Indian oil and gas sector. The PE ratio tells us what the market is willing to pay for 1 rupee of a company's profit. For traditional legacy refiners like IOCL, BPCL, and HPCL, the baseline PE ratio is about 5. But looking at that exact same metric for Reliance shows a completely different reality. The market prices Reliance at a PE ratio of almost 23. That number represents a massive mechanical tension in the market. Investors are taking a company with deep roots in petrochemicals and commodity production and pricing it with the high premium multiplier usually reserved for high-growth technology companies. To understand why the market treats Reliance as an anomaly, we have to trace the company's timeline backward. We need to look at how a business that started in physical commodity trading built the infrastructure necessary to capture a digital valuation. In 1957, Dhirubhai Ambani returned to Mumbai and established a modest yarn trading business. 20 years later, in 1977, Reliance Textile Industries held its initial public offering. The issue was oversubscribed 7 times, introducing retail equity investment to a massive new class of the Indian public. With that capital, the company moved backward up the supply chain. They expanded from textile manufacturing into the production of the raw chemical building blocks required to make them. Through the 1980s and 90s, they built immense petrochemical and polyester facilities at Patalganga and Hazira. This strategy of physical dominance culminated in the year 2000. In exactly 36 months, Reliance built the Jamnagar Petrochemical and Integrated Refinery Complex, the largest grassroots refinery in the world. Under the leadership of Mukesh Ambani, this scale of production pushed Reliance to become the first private Indian organization to enter the Fortune Global 500 list in 2004. By securing dominance in oil refining and physical commodities, Reliance achieved something highly specific. They generated a permanent, massive stream of cash flow. That physical engine provided the capital required to fund their next evolution. In 2006, the company began integrating in the opposite direction. They moved to directly access the consumer by launching Reliance Retail. The retail division scaled aggressively, building physical storefronts and supply chains across the country. In exactly 8 years, it became India's largest retailer by revenue. Then, in 2016, Reliance executed the largest greenfield digital development project in the world, building an entirely new telecom network from scratch to launch Jio. The macroeconomic impact of bringing cheap, accessible data to the market was immediate. In less than a year after Jio's launch, India jumped from 155th in the world for mobile data consumption directly to number 1. By 2020, Reliance had shifted its revenue mix from cyclical B2B commodity sales to high-frequency, recurring consumer revenue in retail and telecom. This shift toward higher-margin, data-rich consumer ecosystems led the market to revalue the company, making it the first in India to cross $200 billion in market capitalization. That same year, Silicon Valley validated the scale of this newly built digital ecosystem. Reliance secured global alliances and investments from tech giants, including Meta, Google, and Microsoft. This is why the market applies a multiple of 23 to Reliance's earnings. The company successfully mutated its DNA from a B2B commodities producer into a dominant B2C retail and digital network. In 2023, Isha, Akash, and Anant Ambani joined the board of directors, beginning the transition of leadership to the family's 3rd generation. They inherit a corporate mandate set in 2020. Reliance intends to become a net-zero carbon company by 2035. To meet that timeline, the company is deploying $10 billion to launch a new energy business focused on large-scale renewable manufacturing and green hydrogen production. The physical footprint of this pivot is currently under construction on 5,000 acres in Jamnagar, the Dhirubhai Ambani Green Energy Gigacomplex. When completed, this site will operate as one of the largest integrated renewable energy manufacturing facilities in the world, building everything from solar photovoltaics to carbon-free energy infrastructure. It reveals the underlying architectural mechanism of the company. Whether the bottleneck is petrochemicals, retail logistics, mobile data, or renewable manufacturing, Reliance applies the exact same strategy: identify the nation's core infrastructural deficit, build a solution at a global scale, and permanently capture the market.
Like, comment, and subscribe. For freshly informative content, please watch InfoShot.